This is Daybreak Asia. We're counting down to Asia's major trading opens, and Haidi, absolutely the direction for Asia today is pretty much set, I think, by what happened in the Wall Street session overnight and that weakness creeping through into tech stocks in particular. So it's that question, can the valuations really be justified?
Right, and Bill, quite a bit of risk aversion from some of the other things that are going on, all right? We're setting up a Super Tuesday, of course. No big surprises expected, but we're also waiting for Fed Chair Powell's testimony, and we are just seeing quite a bit of that caution sneaking back into the markets now.
Yeah, absolutely. And as we said, that Wall Street session overnight, we did see that pullback coming through in the tech space in particular. And that correlation we're actually seeing now between Japan and the US is also at an elevated level. And so, again, as we say, that direction really being set there. But the Nikkei 225 just coming online here today, again, you're seeing that drop being reflected here. We're back just below that 40K mark that we hit earlier this week. Tech stocks, certainly the sector we're going to be tracking, because we had AMD, we had Tesla, we had Apple as well coming under pressure in the prior session. The Japanese yen, you're continuing to track there around that 150 level. We haven't really seen it budging off that, but BOJ, any sort of speculation that we could see a policy shift is certainly something that we're looking at quite quickly. And we are actually seeing Japan's biggest bank now positioning for a rates lift off this month. So we're watching MUFJ plans quite closely. What else we're tracking, if you change on now to take a look at how Korea has come online today, is the Korea inflation story, because we had those numbers coming out in the last hour. We actually saw the headline level, that reading picking up. There was perhaps a bit of a Lunar New Year holiday effect coming into this, because we saw higher food prices, we saw higher transport costs as well during that period, because the core reading, or the core reading, when you stripped out food, when you stripped out energy, it actually met estimates. Still, though, our Bloomberg economics team saying we're not going to see any sort of shift until perhaps the second half of this year. I mentioned Apple's China woes. We did see that drop in iPhone sales in the first period of this year. That has been really playing into Apple prices overnight, and also just taking a look at one of its biggest suppliers here, LG Innotek, as well, that's listed in Seoul, and you can see that weakness. Again, a reflection of that. That is a company that takes about 75%, Heidi, of its revenue from Apple.
Take a look at how we're trading here in Australia, Bao. It is tech that's leading those declines, but we're also seeing weakness across miners as well. We had a couple of big names, including BHP and Rio, seeing a couple of cuts there from investment houses. So that's really weighing, but it is a broad kind of retreat, with this market still pretty close to those record highs. Tech, obviously, that play through from Wall Street really being quite materially a downside, pressuring what we're seeing here in Sydney. We're also getting a bit of event risk. The GDP numbers for the fourth quarter are due later today. That is likely to show that growth more or less flatlined in the final 3 months of the year, and there are some concerns that potentially with the 0.2% expectations from Bloomberg Economics, that could quite easily end up being a negative print, right, and how that potentially sets up for even more sluggish growth on account of that weaker consumer. We are watching treasuries, just a bit of that caution as we get into the testimony expected from Fed Chair Jay Powell. We're seeing Australian debt falling there as well, the yield curve just shifting lower, and we have really seen yields falling for treasuries ahead of that testimony, and also ahead of Super Tuesday. So quite a lot going on there when it comes to the risk horizon for US assets. Just a quick word when it comes to what we're seeing for oil, as well as the sort of demand picture remains pretty murky out of China, but holding pretty steady this morning after that 2-day drop. There are some signs that at least US stockpiles on that side are starting to build. Let's get some analysis now from Kungo, who's a head of Asia Research in ANZ, who joins me now in Sydney. It's really lovely to have you here in the studio here in Sydney. Let's start with the MPC. Obviously, that is a big thing that we're watching this week. A lot of disappointment. I mean, your GDP forecast, the House view, is 4.2%, around 5%. Are they overshooting?
Look, I think it's no surprise that they set a growth target of around 5%. They really need a 5% growth rate in order to achieve their target of doubling per capita GDP by 2035. What really needs to happen now is to back up that, stimulus measures that they've had so far. It's not enough, clearly. So we're expecting further rate cuts, triple R cuts, and more targeted stimulus in order to really achieve that 5% target. It's ambitious, definitely, but I don't think it's out of reach. But you need a lot of things to go right.
Yeah.
And you really need household consumers ultimately to start to spend more. They've been cautiously saving up a lot of money, not spending. If they can get somehow the confidence to come back in and get the consumers to open up their wallets, I think that's going to go quite some way to achieving the 5% target.
There's been no indication that a big bazooka is coming, right? And I think that's what's worrying a lot of people looking at this, 5-ish% target and not the stimulus, commitment to back it up. What do they do when it comes to the consumer? They can't fix the property sector straight away. Do they do direct payments? Will that help?
Well, I think that's why they are really targeting the stock market this year. They are really trying to turn things around and, indicate that the bottom is here, and they're going to try and spur a rally, and in the hopes that this will have some spillover effects into improving consumer confidence and ultimately affecting the spending decision. Now, so far, I must say the stock market looks to have put in the bottom. It has really rallied, but for the rally to be sustained, you obviously need the economic fundamentals to also back it up. So now we're watching, the first phase of it. So far, so good. I think we really need to see that spill over into improved confidence and then improve spending. So the spending that we saw during the Lunar New Year week, I think that was encouraging, but I think we need to see that continuing and be sustained.
The risk of a deflationary spiral taking hold when it comes to the mindset, is that there?
Look, I don't think it's going to necessarily be sustained. I mean, we've seen periods of deflation or disinflation in China before, but they've always proved temporary and eventually it will rebound. So yes, China is facing negative inflation right at this point in time. Now, some of that is due to sort of one-off factors, for example, around pork prices. But if they can really start to get the consumer spending again, I think we can start to move out of this inflationary period.
There was a lot of focus, Kuhn, in this on the budget deficit target being set at around 3%, which is what they've done historically in the past. But when you take a look at the special government issuance that we're seeing as well, does the actual picture look a little bit different to you?
Well, there's always been more spending that's done outside of the central government, if you like. But in this case, there are certainly constraints around what local governments can do, given the level of debt that many of them are facing right now. So I think they're going to have to get creative, and this special vehicles, loan raising vehicle that they have is certainly one avenue to try and get more spending done. But again, I think we have to recognize there's not going to be any big bang type of fiscal stimulus. Any further spending will be quite targeted, and that's just the way it's going to be. I think we'll have to rely on various other tools that they have, such as providing more funding towards certain property developers to make sure the property sector can get going. Like I said, there are plans to reflate the stock market. I think it's an important part of that, and we still believe there's going to be a need for further monetary policy easing as well.
When you take a look at, you talk about reflating the stock market, but the mentions of capital markets, in fact, I'm not really even sure if it came up at all yesterday. So it perhaps signals to us just that level of interest that policymakers as well have in how equities are faring, apart from the signalling effect.
Look, I think they've already done quite a lot before the Lunar New Year break and after in attempts to try and put a floor to the equity market and then attempts to try and get it up. So I think they've already done sufficiently that they feel there's no need to really address it further in the MPC. I think, look, the commitment is definitely there. And so far, the way the market has responded, we're starting to see northbound inflows back into China. If we start to see more of that coming in, I think then we could see a bit more of a self-sustaining rally in the equity market in the near term. But ultimately, as I said, we need the fundamentals to start to show improvement in order for that to be sustained.
The NDRC spent a lot of time talking about addressing the root causes of the property market imbalance of debt risks, right? And this is a sort of, structural slowdown. So perhaps more pain before we see an alleviation of these risks. In the meantime, does that mean markets like India, other EMs that, are much, earlier in their growth trajectory than, perhaps where China was 10, 15 years ago, they continue to kind of take those outflows? So
the other parts of ASEAN and India in particular are certainly attracting a lot more capital inflows in terms of portfolio flows and foreign direct investment flows. Now, part of that, you can argue, is taking away from China. This China Plus One or diversification strategy by a lot of multinationals has been ongoing for a few years. But another major structural change has been Chinese companies themselves. The extent of outward direct investment from Chinese companies have accelerated. So Chinese companies are also investing outside of China into ASEAN and India in an increasingly meaningful way as well. So I think that will continue. That will definitely benefit the rest of the region, and you're going to see massive shifts in trade flows and supply flows in the next few years as a result of that.
Good. Always great to have you, and pleasure to have you here in Sydney. Kun Go, who's the head of Asia Research at ANZ. Still ahead, we get the latest when it comes to the Super Tuesday primaries. Polls begin closing. The race for the White House hits high gear. This is Bloomberg.
It's the biggest day so far in the US election calendar, with millions of Americans in 15 states choosing their preferred presidential candidate in primaries. Let's bring in Bloomberg's political news director, Jody Schneider. And Jody, it just really seems like we're going to be setting up for that November rematch that perhaps no one even wants between Joe Biden, Donald Trump. Super Tuesday, perhaps not quite as super as in the past.
Yeah, a lot of commentators and voters are thinking it was a lot more super when they had more choices. But this time, Joe Biden is going to, sweep to a victory in the Democratic side. On the Republican side, even though there are 15 contests, we expect at most Nikki Haley may win one, perhaps two if she's very lucky. But Donald Trump is really expected to sweep tonight. 874 delegates are up for grabs, 36% of the number that you need to get that nomination, the Republican nomination for president. Donald Trump is well on his way there. You need 1,215 in total. He won't get there tonight. It's mathematically impossible, but he could come very close. And so a lot of people are saying it feels like a general election already, even though it's already only March, and the general election won't actually take place until early November. But these two men are expected to do very, very well tonight. And Nikki Haley, the question for her is, will she stay in the race, and why if she does badly tonight? By the way, she is not holding a public she usually does a public party to watch results come in. Tonight, she's just doing it with a very small gathering with some staffers in Charleston, South Carolina, her home state.
The question is, what next for Nikki Haley, right? We're looking at kind of pollsters saying if she's expected to do well, it's going to have to start early in the night. What are the expectations after Super Tuesday?
Yeah, so tonight her best chances, that's correct, would be in states like Vermont and Maine, maybe Virginia, where you have a large number of independent voters and people who are more likely to accept her brand of republicanism and her criticism of Donald Trump, which has been a large part of her campaign lately. The question is, if she doesn't do well tonight, why will she stay in the race? She said she will stay in through Super Tuesday, and she will look at it after that, but she will stay in as long as there's a path for her. But the question is, if she doesn't do well tonight and she really can't catch up after this point, what is that path? So one would expect we would be hearing from her very soon, perhaps in the next few days, about the future of her race, her contest. And the big question, would she endorse Donald Trump? She had earlier signed a pledge to support the Republican nominee to be able to be on the debate stage last fall. But she's made some comments lately that make it seem like she may not still support the Republican nominee if it's Donald Trump. And it's almost certain to be Donald Trump.
Yeah, well, that's an interesting point, Jody, because I think, when you take a look at the attacks that she's made on Donald Trump, it certainly seems like she's burned some bridges there. So what is it that you think that Nikki Haley is doing exactly? There's sort of like, is she setting up to be second in line in case some sort of legal issues with Donald Trump prevent him from becoming president, or otherwise, the other option could be perhaps she's looking at 2028 as a possibility.
Yeah, and I think what we're hearing from experts is both those things are likely true. She decided to jump into the race. She got some momentum. She got a lot of money. A lot of donors sort of saw her as an alternative to Donald Trump, but she could not. She maybe was too slow with the criticism, but she could not blunt his really steamroller through these early primaries. He's just taken all these races. The only one she has won so far is the District of Columbia this past weekend. So it's very hard. As the experts say, you can only stay in as long as you're winning. At some point, you have to win some races to make it competitive. I'm sure she's thinking about looking at 2028. A large part of her campaign has been saying we need a new generation of leadership. An 81-year-old and a 77-year-old running for president is not what younger people want. And I think she is young, and I think she could have a good chance in 2028 if she chose to do that. We're going to find out a lot more about what she wants to do and what she's likely to do. I think in the next days, certainly in the next few weeks. It will be very hard for her to stay in. She's also starting to lose some of these donors who had supported her even more recently. They're starting to spend their money on House and Senate races.
Bloomberg's political news director Jody Schneider there. And do stay with us here on Bloomberg with our special coverage of Super Tuesday on Bloomberg TV with Joe Matthew and Kaylee Lyons. That begins at 10 a.m. in Hong Kong, 1 p.m. if you're watching in Sydney. Some of the other political developments that we're watching, the UK Chancellor of the Exchequer, Jeremy Hunt, has told the BBC that his budget will be prudent as he looks to temper hopes within his party for significant tax cuts. Bloomberg has learned that Hunt is set to cut income tax or national insurance by at least 1 percentage point in a bid to give his Conservative Party a poll boost. Sources say Hunt and Prime Minister Rishi Sunak are still weighing how far they can go with tax cuts. Israel is settling $8 billion of international bonds, its biggest sale of dollar notes on record. It's also the first such transaction in public markets since the war with Hamas began 5 months ago. The government has launched a 3-part offering of notes due in 5, 10 and 30 years. Sources say the sale reeled in at least $34 billion worth of investor demand. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Bloomberg subscribers can find that at Daybreak on your terminals. It's also available on the mobile in the Bloomberg Anywhere app. You can customize those settings as well, so you just get the news on the industries and assets that you care about. This is Bloomberg. Apple is facing a $2 billion antitrust penalty from the European Commission for shutting out music streaming rivals. Speaking exclusively to Bloomberg, the bloc's competition chief, Margrethe Vestager, told us more about the case and landmark tech regulation coming into force on Thursday.
The messaging from the Apple case, of course, is don't do this. Stop what you're doing. Don't put anything in place that would have the same effect. We see an illegal abuse that has been ongoing for a number of years, which has made it, virtually impossible for customers to choose if they want the payment service in-app by Apple, paying the fee, or they would want to go, for instance, to a website and have a cheaper subscription price. And that consumer choice, well, that has not been enabled.
And so day one of the DMA, because this is really going to be the focus now coming into effect on Thursday, what is your priority? What are the actions you think that need to be immediately addressed that this covers now?
Well, Thursday, Compliance Day. Reports will have to be filed. What have we done as a gatekeeper to comply? Then we have a number of workshops, one on each gatekeeper for third parties to say, does it work? Do we see the efforts in order to live up to the DMA? And then, of course, if we have a suspicion that there is non-compliance, we will open cases. And we will open cases based on Where can we have effects? Where do we have the most blatant non-compliance, if we find that, so that we can throw our resources in there where we have the most obvious benefits.
But you've come up with this architecture, presumably with something in mind of the things that you see that concerns you. And I really would like to get a steer of kind of what are the things that concern you the most that the DMA will be targeting and capturing?
Well, I think it's important, for instance, that you can have more than one app store on your phone. Because there are other circumstances. If you don't like one shop, you'll go into another one. If you don't like a generalized shop, you'll go into one that is more specific. I see that there are multiple app stores that could be interesting for parents towards their children, for gamers, numbers of things. That is really important. And that the environment is not sort of disabled to make that really unattractive. Because the DMA is quite specific on a number of things. These things also when it comes to having a fee structure that actually enables people to use these new benefits.
That was the European Commission Executive Vice President there, speaking exclusively to Bloomberg's Oliver Crook in Brussels. And just some breaking news that's crossing here, because we are, of course, Super Tuesday is upon us, and we've got 15 states across the US choosing who they want to be tipped to enter into that presidential race. But Virginia is among those holding Democratic and Republican presidential primaries today. Republicans, the choice has been between Donald Trump, Nikki Haley, and as well 4 other candidates that were on the ballot. But we are getting certain networks now, CBS, MSNBC, are calling this race in favour of Donald Trump, with at least NBC putting that figure at around 63% of the vote. Nikki Haley really trailing there with around 35%. We are seeing live pictures here of the Trump headquarters there. That's located in Palm Beach, Florida. But that is, of course, as I said, 15 states today choosing who they want to enter that race in what's going to be a very drawn-out contest and looking to be a rematch, most likely, between Joe Biden and Donald Trump, and certainly not something that a lot of voters perhaps wanted to see in the US. We'll leave that there, but let's take a look at how markets are faring so far in the session, because we are seeing a broad weakness here. We've got the Nikkei, the Kospi, just about 25 minutes into trade so far. What we're watching in particular so far is the tech story that's playing out. We heard there about the ban that Apple, or the fine rather, that Apple is facing in the EU. That's on anti-competition rules. But overnight as well, those woes for Apple really deepened, because it was that concern around shipments to China in particular. We do have some reporting out that iPhone sales for mainland China fell nearly 25% in the first few weeks of 2024 alone. And so you are seeing that big drop there. LG Innotek, for instance, really leading that decline, but it does get about 75% of its sales from Apple in particular. So that's the state of play here. But certainly Apple, AMD, Tesla, these were all the big names that we were looking at overnight, Heidi.
Some of the other corporate developments that we're watching this hour, Bell and Citigroup CEO Jane Fraser says her reorganisation aimed at streamlining the bank and making it more competitive has gone faster than expected. Fraser told a banking conference in New York that Citi is not going to repeat mistakes that it's made in the past. The bank is cutting 20,000 jobs in its bid to boost returns. Bloomberg has learned that the family office of DFS Group's co-founder Robert Miller is disbanding its own investment team. Sources say Hong Kong-based Sale Advisors will wind down after 20 years, handing its roughly $2 billion investment portfolio to external firms. We're told the family office is in talks with firms including Blackstone. Bloomberg has learned that the largest US public pension fund is looking externally for its next chief investment officer. Sources say CalPERS' shortlist of 4 candidates includes Jonathan Grable, who's the CEO of the Los Angeles County Employees Retirement Association. The $490 billion fund has had 4 CIOs since 2009. Coming up, the Centre for Strategic and International Studies joins us to discuss China's economic outlook after setting that ambitious growth target of the National People's Congress. We are just getting Australian GDP for the final quarter of 2023 crossing the Bloomberg, actually being in line with expectations when it comes to that quarter-on-quarter seasonally adjusted number, 0.2%. There had been some concerns when it comes to the lower end of forecasts that potentially there could be a flat or even negative print, but still pretty close to flatlining at 0.2% for the final 3 months of the year. That year-on-year number coming at 1.5%, also in line with expectations. That slowdown from the 2.1% that we saw. A little bit concerning when it comes to the component of the slowdown that we've seen in consumer spending and consumer sentiment. Households obviously have been impacted by the 13 interest rate hikes that we've had from the RBA, and that sort of cost of living crisis aspect of things is really starting to weigh, given the muted levels of spending that we saw in what should be the busiest retail months of the year heading into the festive season. Not much of a reaction when it comes to the Aussie dollars, just sitting under that 65 US cent level. Of course, FX more broadly, a lot of these dollar pairs have just been really quiet, with the US dollar trading pretty range bound at that point. We are looking at the potential for further sluggish growth coming for the Australian economy in the coming months as well. We've seen not just the consumer side, but also residential construction have been really the other major drag there as well. Bloomberg Economics expecting remaining subdued growth, with the cumulative effect of higher interest rates dampening both households and property construction activity. We are seeing a bit of a down day really across the board, but we're seeing particular drags in tech, in miners as well, here in when it comes to what we're seeing for Australian equities as well. The yield curve following largely what we've seen in the US. Speaking of the US, we are getting some news when it comes to the developments on Super Tuesday, right? We have seen, of course, Virginia already being called by a couple of networks for Donald Trump. We're now seeing that Donald Trump has won the North Carolina Republican primary that's being called by NBC News at the moment. We're seeing North Carolina just sort of closing at 7:30 p.m. New York time. That was a swing state, according to CNN and now NBC, both calling that state for Donald Trump. Virginia has been called by MSNBC and CBS. That was also a state that was quite contentious, because we have seen sort of some, in particular, unusual developments when it comes to Virginia there as well. Vermont being called by President Biden, but the latest developments there is North Carolina, the Republican primary there, being called for President Trump. And Belle, as we continue to watch political developments, of course, lots of cross currents, all of which pointing to caution for traders today.
Yeah, that's right. It's really that concern that's coming into markets here. Are the valuations that we've seen for tech stocks in particular really justified at this point in time? And that sort of set the tone overnight, because we saw that pullback coming through in the tech space in particular. Apple, Tesla, AMD, some of the names we were tracking in particular. But this is the setup so far as we head through the session in the morning, and it is that broad story of weakness. You've got the Nikkei 225 tracking back down just fractionally from that 40,000 level it hit earlier this week. The Korea market as well, one to watch in particular. You've got the likes of LG Innotek, for instance, slumping so far more than 5%. Takes a lot of its revenue from Apple, but you're seeing IT stocks so far among the big laggards. What else we're tracking in the session is that story around China, because yesterday we had the MPC kicking off. Of course, it was all about that very ambitious growth target of around 5%. We did see initially the market reaction looking pretty muted, really. Investors sort of saying this was in line with what they'd been expecting. But then as we headed through the afternoon, we started to see a bit more of a drop coming through in tech stocks in particular. The Hang Seng Tech Gauge really declining, Heidi.
Yeah, and as you said, that around 5% was perhaps more ambitious than a lot of investors had been expecting for the growth target, given how challenging it was to even to try to meet that target in 2023, and arguably a lot more headwinds going into 2024. So the major question really is how Beijing wants to reach these goals. Let's bring our Bloomberg opinion columnist Shuli Ren joining us now. And Shuli, you know, it's difficult because they obviously wanted to set a strong-ish target to try and convey a message of confidence, but they need to back it up with forceful fiscal stimulus and support, and we're not getting any indication of that.
That's right, Heidi. So what we are seeing this year is basically a carbon copy of all the numbers from last year, even though economic conditions have changed dramatically. For instance, the government still sees CPI inflation to reach around 3%, even though its statistical bureau said that China is slipping into deflation, right? And then a lot of people were hoping, economists were hoping that Beijing will kick up its fiscal deficit using the fiscal power to boost the economy, because we're already seeing that the central bank's rate cuts have not really worked, right? And still we're seeing 3%, very, very anemic. On a broad-based basis, China's fiscal deficit can probably hit 6.6% this year, but it's nothing compared to what we're seeing in the U.S. I mean, in the U.S., during the pandemic, we saw double-digit deficit. Even now, U.S. is running at over 6%. So people are just asking, how can you reach the same growth target, even though your economic conditions have worsened completely?
Shuli, I'm taking a look at your column, and you finished it off saying it's now clearer than ever that the Communist Party is walking even further away from its own people. That's quite a strong statement. So what's behind that for you?
I mean, this NPC was always rubber stamp Congress, but this time it's just ridiculous. People are making fun of those economic targets, for instance, inflation, right? And also, Li Qiang is not doing the press briefing this year. It's a break from a 30-year-old tradition that the Chinese Communist Party has established. Basically, people wanted to have those very rare chances to interact with the top politicians, and that even those few chances are being thrown away. I mean, when China had this NPC and the press briefings, it was a sign of opening up the economy and opening itself to the world. And we're seeing that the government is closing itself to the rest of the world and to its own people now.
All right, that was Bloomberg's Shuli Ren there. And let's bring in Scott Kennedy. He is Senior Advisor and Trustee Chair in Chinese Business and Economics at the CSIS. Scott, I'm going to use Shuli's phrasing here. It's now clearer than ever that the Chinese Communist Party is walking further away from its own people. Do you agree with Shuli on that?
I would call this the incredibly shrinking National People's Congress, and to the extent that the NPC was ever a forum for transparency and engagement, I think she's right. The very short speech that Li Qiang gave, the shortened NPC as a whole, down to just 7 days, the lack of a press conference, a very, very thin agenda. China, just last week, the Standing Committee was given the right to modify its national state secrets law. The NPC gets to modify a logistical law about the organization of the State Council. There's not a lot of news going on here, and it really speaks to how much more important the party is in setting and implementing policy compared to the National People's Congress or any of the other parts of the government.
When you take a look at the growth target, the deficits that are being set, the inflation numbers, I mean, a lot of these are very similar to what we've seen back, pretty much carbon copies of previous work reports. So what's going on here? Is it that the Chinese Communist Party, is it fully grasping the seriousness of the situation? Or is there something else at play here that perhaps it's, of course, not clear to us, given there has been that extra level of obscurity that's been added as well?
Sure. There is, I mean, if you read the government work report and what they're saying, like just from like a basic economic perspective, this was just a typical growth challenge. Maybe they could have a little bit more stimulus, expand the fiscal deficit a little bit more. But that's not the problem. This isn't a numbers problem. This is a confidence problem. And they do hint at that in the government work report, but nowhere near enough. What people really want to see is that this is a party that feels people's pains, that understand that there are a lot of challenges, and that the solution isn't just more and more spending and spending on high tech. It's about empowering and making wealthier Chinese people in the cities and in the countryside. The hukou, the residency system, was not mentioned. Nothing in this report was mentioned that really is going to be about transferring wealth to Chinese households. And really, that is what needs to be done to raise confidence domestically in order for people to take the NPC more seriously.
And I think that goes back to perhaps the very little that we're hearing from Li Qiang, right? Because his predecessors, for better for worse, I think probably had a warmer communications relationship with the outside world insofar as any top Chinese leader can. Does that indicate to you that this is Xi Jinping wanting to have the highest public profile and then every other leader kind of taking a back seat?
It could be. I mean, Li Qiang is not a terrible person, is a reasonable bureaucrat, but he can't get even his picture on the front page of papers this week, and this week should be the 1 week out of the year in which he gets some attention. His predecessor, Li Keqiang, was a very able official. I think it's actually kind of sad that China isn't showing more homage to Li Keqiang this week because of his passing and what he meant. And so, yes, it is just one person that gets the attention, and the NPC and its 2,977 deputies are going to be faceless participants in this program this week.
Well, that's interesting that you mentioned that because, of course, the overall narrative is that Li Keqiang was sidelined, right? Is the, taking away of prominence from the role of premier something that perhaps naturally follows what we saw happen to him?
I think it's part and parcel of a Xi Jinping-run China. He is the chairman of everything: domestic policy, foreign policy, the military, and no one else is going to edge in on him. I just think that they want this NPC session to be over and done with, and they can go back to what's important in terms of him. I think a lot of us are wondering, will the Chinese leadership soon announce a third plenum so that they can put a broader framing on these economic policies to try and reassure people? They're not looking at the NPC as a source of real leadership and initiative. It's from the party and from Xi. Announcing a third plenum soon would help address that kind of concern.
Scott, always great to have your views, particularly on a big China week like this. Senior advisor at CSIS, Scott Kennedy, there with us. Well, Morgan Stanley, for one, seeing more volatility in Chinese equity markets coming as Beijing's growth plan failing to excite investors hoping for bolder measures to revive the economy. Let's get more from our Asia Stocks reporter, Gina Yu. And it's not just the growth plan, right? It's this around 5% target seen as too ambitious if it doesn't also come along with forceful stimulus and support measures. Investors are not super confident that this is going to be achieved.
Yes, exactly. I think markets, there are still a lot of caution, a lot of skepticism, after all the economic targets were unveiled yesterday. I think in general, the market was very disappointed. I guess the only bright side was the local government bond size, which came a little bit bigger than expected. But apart from that, the rest of the targets seems to be in line with the market expectation. And more importantly, a lot of investors are saying to achieve the inflation target of 3% this year, it's going to take a lot of efforts. And so far, I think investors are really disappointed at the lack of concrete measures. So that's why we've been seeing a very heavy selling pressure in Hong Kong yesterday. For onshore, it was better, but it was supposed to be on the back of state funds support on some bigger blue chips in the onshore equities. But I think in general, among the offshore investors, they're still dominated by disappointing targets by the top leadership.
So that seems to put a lot more pressure on the so-called national team then to try and prop up sentiment. How long do you think that they can really continue to do that for?
To be honest, so it's not surprising to see national team, step out, prop up the local markets when there is NPC and CPPCC meetings in the past. But it's just like, for example, like for offshore markets, like there is not really much that they can do. Also yesterday, so even with the national team support, we were only seeing banks in the Asia market gaining. But most of the stocks in other sectors, especially in Hong Kong stocks, they were all falling. So I doubt the national team can literally lift the market. It's just like give investors some comfort that there's still some buying powers in the market, especially in the onshore, that can make A-shares to have a little bit more support versus the offshore equities.
That was our Asia Stocks reporter, Jeannie Yu there, and you can watch us live and see our past interviews on our interactive TV function, TV Go. This is for Bloomberg subscribers only. Check it out at TV Go.
Counterpoint research data shows Apple's iPhone sales in China plunged 24% through the first 6 weeks of the year, raising concerns about worsening demand for the smartphone. Let's bring Bloomberg technology editor Mayumi Negishi. So, Mayumi, tell us about this story. Is it about sort of the macro weakness that we're seeing, weakness in the Chinese consumer? Is it about the competition?
Well, it's true that overall smartphone demand in China has been weak for some time. But what Counterpoint's numbers seem to indicate here is that the slowdown is, disproportionately hitting Apple. Part of that is that budget phones are taking market share, but the main reason does seem to be Huawei. I mean, their unit sales grew 64%. And granted, this is from a low base, but still, ever since Huawei showcased its Mate 60 Pro devices, there's been this wave of buy China patriotism. Buying a Huawei phone full of homegrown China-made components, it's such an easy way to show that you love China. And now this is just data for the first 6 weeks of the year, but it does seem to lend credence to this narrative that Huawei is eating into Apple's business in China.
Yeah, so then how does that sort of set us up then, Mayumi, over the longer term here?
Well, it's a shift. Apple has rolled out discounts on its web store in January. Online resellers are also cutting prices. So we need to see if this is a temporary blip. We need to see if those discounts make a difference. Another thing to remember is that Apple has really immense resources, and it's ramping up investment into AI and see if those have any effect. But I think the main factor, at least in the Chinese market going forward, is whether Huawei is able to keep up this momentum and deliver at scale, and whether it can source the components and materials it needs, given the constraints put upon it as this U.S.-China rivalry really escalates and rhetoric really heats up during an election year.
That was our tech editor there, Mayumi Negishi, joining us. And let's shift now to another tech story we're focusing on today, and that's Alibaba, because it's said to be spearheading its second major AI deal this year. Sources say it's leading a financing round of at least $600 million for Chinese AI startup Minimax. Let's get more now from our executive editor for Asia Technology, Peter Elstrom. And Peter, we know that Alibaba's sort of been on the hunt for further prospects here, but what is it exactly about Minimax that stands out, do you think?
Right. So we're seeing Alibaba get quite aggressive in terms of these investments. As you mentioned, they're investing about $600 million into Minimax. That's going to bring the valuation of the company up to at least $2.5 billion. So it's another AI startup in China that's getting quite a bit of momentum. Another interesting component is that this is the second deal that Alibaba has cut just recently that we reported on. They also led the largest funding deal for an AI startup ever, a $1 billion deal just recently earlier this year. So you're seeing Alibaba get quite aggressive in the AI front. They're doing some things internally, but they're also seeding these outside startups to try to help the effort overall. It's kind of the Microsoft strategy. Microsoft is doing some things internally, but they're also funding OpenAI and ChatGPT, of course, to complement what they're doing internally.
You know, Alibaba obviously has been through a tough time in recent years with the government. Is the tide starting to turn? Because I find it interesting that the Cyberspace Administration published this piece by Eddie Wu. We heard yesterday at the start of the MPC this, whole nation approach, the big bump to R&D spending for tech. Are companies like Alibaba going to see a lot more, fervent government support now?
Yeah, that's a really good point, Heidi. Alibaba got quite beat up a few years back after the government went after their financial affiliate in particular. But Alibaba had been one of the most aggressive investors in these startups, along with Tencent, really seeding the whole Chinese technology ecosystem, but also controlling a big chunk of it, too. So with the government crackdown, we saw them pull way, way back in terms of that deal making. You're right. It looks like they're getting some encouragement to lead in some of these areas, especially areas that are strategically important to the government, like AI, semiconductors also. So I think we're going to see more deals like this. Tencent is being quite a bit more aggressive internally. They're investing in their own AI services along with Baidu. So you're not seeing the kind of deal making that Alibaba is doing. Alibaba maybe is a step behind in terms of their internal efforts, but they're now getting quite aggressive in terms of the external efforts with this deal making.
And then how does that sort of set up Alibaba in that internal competition space then? Because Baidu was really seen as perhaps the number one in the race.
Yeah, you're making a very good point. China is a market apart. Because the Chinese government is not going to allow any foreign companies into the space, you sort of have, you have a free playing field for the domestic competitors like Alibaba, Tencent, and Baidu in particular. You're not going to get OpenAI involved there, or Microsoft, or some of the others. There is an internal competition. I think you're right that Baidu so far has been seen as fair bit ahead. SenseTime is another very aggressive competitor. Alibaba is probably a step behind. Tencent is aggressive. And don't forget ByteDance, the parent of TikTok. They have tons of data. They have lots of AI capabilities. They've been very good at this stuff so far. So sort of quietly, they've been making some aggressive moves there too.
All right, Peter, thanks very much for your time. That was our executive editor for Asia Technology, Peter Elstrom there, and we'll have more ahead. This is Bloomberg.